In Full Zoom is presented by Calvo Enterprises, Inc. and IT&E.
Good day, everyone, and welcome to another edition of In Full Zoom. I'm Nestor Licanto, and this week we're going to talk a little bit about inflation and how it's kind of been rising. And a perfect person to talk about that is the Guam Department of Labor's chief. What is your title now, Gary? You're the chief
economist.
Economist still? All right. The chief economist, and who will be able to give us some insight into the inflationary measures that are happening and how it's impacting Guam. Gary, welcome to the show.
Thank you for the invitation.
All right. So initially, as you're aware, inflation is on the record. We're experiencing record inflation nationwide, the highest in, I believe, 40 years. How is that impacting Guam?
People are noticing higher prices on an array of things, primarily food and gas and housing.
Yeah, and so obviously the cause for this are a variety of things. The pandemic, the Ukraine situation, gas prices. We live in a very global society. So what is the economic outlook forecast look for Guam?
Well, in general, I'm expecting the economic outlook to be positive with growth primarily fueled by resumption of tourism that's coming back with reduction in COVID restrictions, new airline service to Japan and South Korea, and military buildup is getting well underway. The outlook in terms of price increases is unfortunately it's sort of like a semi truck going down the road. You have a considerable inertia that prices are going up, and it will take some time for that to slow down. Hopefully they won't. There's some outlook forecasts that the growth in the price increase won't be as large as it has been in the last year, but it's almost certainly going to have continued price increases in a substantial amount over the next year.
Yeah, when you say there's going to be substantial increases, what are you talking about? How much more?
Less, probably somewhat less than what we've seen. And the numbers for the U.S. Price increase, I'll just talk about the Guam has been fortunate. It's been slightly less than the United States, but let's start with the U.S. The CPI for all items rose 1.2% in March for all urban consumers. Seasonally adjusted rose 8.5% over the last 12 months. So Guam is very much tied into the U.S. economy. So generally, inflation, as it occurs in the U.S., occurs on Guam in similar rates, although there's some variation due to labor issues and housing issues. But that's really driving the increase in Guam prices as the U.S. The Guam Consumer Price Index just came out for March, and let's see if I can show you that one. Does the screen share show for the Guam Consumer Price Index?
Okay, Jace, can you share his screen, please?
Oh yeah, got it.
The Guam Consumer Price Index for the first quarter of 2022 recently was released by the Bureau of Statistics and Plans, but it shows the 2022 Consumer Price Index showed a 1.7% increase over the fourth quarter of 2021 and a 5.8% when compared to the same period last year. So Guam's price increase, Consumer Price Index increase has been moderately lower than the U.S., which is good, but it's substantial, and higher than it has been in previous years. Also, the report from the Bureau of Statistics and Plans shows how the index has moved for various items. The rate of increase has been highest for energy, not surprisingly, gasoline and power, but significant for other items as well.
Yeah.
Particularly food. Food went up overall by 12% from the 1 year earlier in the Guam Consumer Price Index.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. GU Self-Storage, conveniently located near the Harmon McDonald's. We offer affordable rates, online payments, and auto bill pay for your convenience. Plus gate access daily from 6 a.m. to 9 p.m. Call us today at 648-7867 for more information. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
Same things that basically are driving inflation in the mainland are also driving inflation in Guam. And what are those?
There's a lot of things. If you can see I came up with a little prop here, if you can see it. Scissors, the economy, pricing in the economy is basically based on supply and demand. So often you'd have, if the supply goes up, or if the demand goes up, you have an increase in the supply as well. So prices would stay the same. But we have a situation where the demand is going up and the supply is contracting at the same time, and the consumers are getting pinched with higher prices. The equilibrium is going up. So there's a lot of factors that are affecting both the supply and demand that are quite unusual. The demand side of the equation is fueled by a lot of federal policy to combat the COVID downturn in the economy that includes aggressive stimulus. So a lot of money being poured into the economy in the US as well as Guam. So that provides more funds for consumers to spend, as well as an aggressive monetary policy with low interest rates, which allows people to pay more for housing and bid up the prices. So the demand side has been strong. And also when we went into the COVID, both the supply and the demand contracted because people were staying at home, not purchasing as much. They were saving some of the relief money. And also people were not working, so the supply contracted. But now with the reopening of the economy, both the demand is going up as people are spending pent-up savings and pent-up demand for travel, but the supply is not coming back as fast as it needs to. And we see constraints in the airline industry where there's not enough pilots and workers coming back, so they're not able to add flights as quickly. So the demand side is an important component, and the Federal Reserve is already started to tighten fairly aggressively, and same thing is happening with fiscal policy. The government is cutting down on a lot of the COVID spending. So there's federal policy in the works to clamp down on the inflation. So sometimes that takes a while from the time you take the medicine till you feel better. On the supply side, there's a range of factors, as I mentioned. Some of them are just adjustment coming back from COVID, but there's also COVID-related things like the shutdown in Shanghai and China. So some of the factories that make the parts, the chips and automobiles, have been shut down. And so not only the production has been affected in the supply chain, and what's interesting is as the world economy has gotten more global and international, if you're missing a part like a chip from Taiwan, then the whole car can't be completed. And so even if you have most of the parts, you can't complete the product. So that's forced factories in the US to shut down temporarily as well. So not only is there the global supply chain affecting the production process, it's also affecting the shipping and the export prices. Some of the goods are stuck in containers in Shanghai. Some of them are stuck in the ports in Los Angeles. So, and the shipping has been affected, but also the trucking has been constrained with some of the truckers who were in the business of being truck drivers after the COVID. They've moved out of the industry, and it's taken time to adjust. So anytime there's a big change, it takes time to adjust. So we have supply chain issues related to COVID, and now added on to that, we have supply chain issues related to the war of Russia's invasion of Ukraine. And that takes several components. One is partly due to the sanctions, exports from Russia of oil and gas, fuel to Europe has been constrained, but also less in the news. Russia and Ukraine were big exporters of agricultural products. So that in many parts of the world is affecting the food supply. Also constraining the agricultural products and making food prices higher are things like the reduction in Russia's exports of fertilizer, so the crops can't be fertilized as well, and that's going to be having an impact. Also, we have supply chain issues in some areas due to droughts, weather conditions, and fires and insects, and a whole array of things that affect agriculture. So we've got a strong demand and a lot of supply chain issues that I believe will be worked out over time, but these things don't happen that quickly.
Of course. Yeah. So are we completely at the mercy of global and national conditions? Is there anything we can do locally against inflation?
Well, when prices go up, that means whoever is selling the goods are getting more for them. So some people, like landlords, are benefiting from higher prices, and people that are selling the houses are benefiting from the higher prices. So the money is still in circulation. With the military buildup, there's more people employed, and so the issue of higher prices is in relationship to your income. If your income is also going up, then you can afford the higher prices. But one of the concerns is that incomes have not been going up as high as the prices. So we need the two to be in better sync. So incomes are going up. It's desirable that the incomes are going up faster than the prices, so you have a real increase in how much you can purchase with your dollars.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. GU Self-Storage, conveniently located near the Harmon McDonald's. We offer affordable rates, online payments, and auto bill pay for your convenience. Plus gate access daily from 6 a.m. to 9 p.m. Call us today at 648-7867 for more information. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
So is there any relief in sight? Is there any kind of visibility as to when inflation can be, adequately brought into control?
Well, it's pretty hard to predict because there's so many things going on in the world that can have a big impact, particularly the unexpected surges of COVID that various waves that are not very predictable, and governments' responses to them, such as in China, and the war in Russia and Ukraine, and the government sanctions that are restricting a lot of activities. So it's pretty hard to tell. We have One leading indicator that gives us a good idea that's not very much talked about, and that's the producer price index. So as things are produced, so on Guam and in the US, people are familiar with the consumer price index. That's what it costs for consumers. But the US Department of Labor, Bureau of Labor Statistics also has what's called a producer price index. That is, what does it cost for producers like auto manufacturers to buy things that producers buy, like rolls of aluminum and steel and computer chips and glass. And that gives us an indication of where the consumer prices are going in the future. And what's happened is that the producer price index, the cost of producing things, is going up. It's gone up 11.2% since March 2021, the latest numbers from the Bureau of Labor Statistics. So as the producers have to spend more to make things, then when they sell them to the retailers and ship them, then those goods will be more expensive. So we're pretty much assured that prices will continue to go up, but hopefully at a lower rate. Some things that are going to clamp down is with the higher interest rates, people will no longer be able to bid up prices as much for houses and condominiums, because they won't be able to afford the increases that have occurred in the past year or two.
Yeah. Speaking of the general economy, it's kind of been widely reported that, the federal pandemic assistance has really been the key to keeping our economy afloat. But as that has winded down, are we starting to see, or will we start to see a negative impact on the economy because of tourism still being down?
I think it's a negative impact primarily for those that were in the tourism industry, that they've lost that support. So from a personal level for that sector, their businesses and individuals are hurting. But in terms of the overall economy on Guam, the military buildup has been accelerating very substantially, so that it appears that the revenues and employment and the key indicators of Guam's economy are actually expanding. People are working more hours, they're earning, more people are working, and they're working longer hours. And construction employment has gone up, the number of H2s has gone up, the revenues have gone up in the government of Guam. So in terms of the whole economy, we're on an expansionary path, and I expect that to accelerate with the continued acceleration of the military buildup. And I think we're going to see a pretty fast resumption of some tourism activities with the relaxation of the quarantine rules, both in South Korea and in Japan, so that people that are vaccinated will be able to travel in both directions, come to the United States without a quarantine and go back to Japan or South Korea without being quarantined. So it will take quite a while for it to get back to the levels it was pre-pandemic, but we should see a significant increase in the next year, I believe, or even months.
Yeah, and well, construction, as you say, will provide an additional boost to the economy. It's really the return of tourism, a resurgence of tourism, that's really going to carry us through, isn't it?
Absolutely.
Yeah.
Yeah, no getting around that.
And is there anything else that's on the horizon that can provide an additional injection along with the construction, or is that pretty much what we're going to be relying on for the short term?
I think the resumption of tourism, and there's some businesses were in a position to take advantage of the lull in tourism to do major renovations of the hotel. Also, considerable private sector building as well. There's also it's going to be primarily construction, but not exclusively construction. The federal government's infrastructure bill that has potential for additional road and other projects for Guam. So it'll probably primarily be related to construction.
Okay. And maybe look into your crystal ball and maybe tell the people out there who are suffering right now from all of these rising prices for food and gas, what they can expect through the end of the year.
I think, well, there's some forecasters for the Federal Reserve and other private econometric forecasters that have forecast continued inflation for the next year, but at a little bit of a lower level than what we've seen in the last year.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. GU Self-Storage, conveniently located near the Harmon McDonald's. We offer affordable rates, online payments, and auto bill pay for your convenience. Plus gate access daily from 6 a.m. to 9 p.m. Call us today at 648-7867 for more information. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
All right. So the prices are going to pretty much stay or maybe increase a little bit through at least the end of the year until we finally maybe see some light at the end of the tunnel for our tourism industry, which I think you agree is pretty much what we're banking on to pull us out of the whatever economic doldrums we are currently in. Is that pretty much the case?
That's the case. Also, there's been people adjust to the situation. So some people that were unemployed have retired. They were eligible to retire. Some people have gone to school or changed their lifestyle to stay at home and be a homemaker. So there's in the U.S. and it appears that the same situation is occurring on Guam, that some people have reassessed their priorities and decided to stay out of the workforce for this time being. Also, anecdotally, it appears that some people have relocated to the United States where jobs are more plentiful, so that reduces the number of unemployed, but it also could create a problem in getting the tourism industry going as fast if key people have left the island for greener pastures. And now when you're ready to open the business, you call up the employees to come back and they may not be available.
Yeah. And can that be attributed to, the number that came out with the census was, I think, lower than what people expected. Could this exodus to find work be one of the reasons behind that?
That would be the primary reason I would think of. But also I've heard lately some comments made that people have relocated the states for more affordable housing. So if you want to start a family or get a house, that may be out of reach, for the indefinite time period on Guam. So that, and sometimes medical care and a variety of reasons are factors as well.
Yeah. Do you have any visibility on the housing situation? Are prices going to be leveling off anytime soon?
That would be hard to forecast, but I think that the dramatic increases that have occurred in the last 2 years are going to be leveling off substantially. We might still be seeing some increases, but with the combination of the prices being as high as they are, that are getting to be unaffordable, and the interest rate increases, which make them the borrowing costs, which are the primary cost of a housing loan, are going to mitigate that. On the other hand, as we get closer to the Marine Corps relocation, there will be considerable demand for housing. So I think the housing demand will stay quite strong until the housing is built and opened on the bases, and the much of the military construction starts winding down and reducing the pressure on the housing stock.
Yeah. Speaking of the military, how do you think their arrival will impact rental prices?
And I don't have a forecast on that, but it depends a lot whether they're housing people on base and as opposed to in the community. If they're housing them on base, then that could be a reduction in rental incomes and less pressure on the local housing market.
Okay.
So, how that will balance out.
All right, we've got a couple of minutes left. Gary, anything else you wanted to add? What should we be looking out for?
I think that's pretty much covered it. Hopefully that COVID will continue to get under control, and that will be our best hope for more speedy recovery in the tourism and all of the related jobs and the airlines and the hotels and the restaurants and the retail stores.
All right. Gary Hiles is the chief economist of the Guam Department of Labor, giving us some insight into the economic picture heading into the coming year. Thanks so much, Gary, for joining us.
Thank you, Nestor. Appreciate it.
All right. I'm Nestor Licanto. Thanks for watching, everyone. We'll see you again next week on In Full Zoom.
In Full Zoom is presented by Calvo Enterprises, Inc. and IT&E.